money-back guarantee so you have nothing to risk. Sign up today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 243, NASDAQ up 102, S&P's up 27. Gold contract down $8.30, trading 1903. You get silver up 4 cents, $24.74 an ounce. Light sweet crude down 37 cents, $40.46 a barrel. Notes and bonds. It's a big one, folks. The bottom line is that note and bond market is busting out this bottom, and this could come to a little shock in this marketplace because bottom line is that folks are thinking rates are going to be basically staying down, and this is saying rates are going up. You get the 10-year down 7 ticks, 138.22, 30-year off almost a full point, 29 ticks, 173.19, and King Dollar. King Dollar down 295 ticks, trading 93.130. Euros at 118. The yen is at 105.5, and the British pound is at 129 to 1 U.S. dollar. Tom O'Brien, what's going on?
Boy, where do we start on a day like today, man? You went through it all, lots of moving parts, and yeah, that 10-year, the yield a hair under 0.8%, man, which is a far cry from where we've been for sure recently.
There's no doubt, and this has been pounding on this the August 28th, and bottom line is that I believe we just broke it, 173. Oh, look at this. It hit it exactly. 173.16. Unreal. Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do each Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, you want to understand the option market, option strategies, futures. It is the most wonderful time of the year, folks. We have just kicked off earnings. And if you want to see how Kevin and his team can bisect and dissect these earnings with strategies, awesome program. If you haven't test-driven yet the Thinkorswim platform, so easy to do. You're sitting on our website right now. Hit the banner. Bring it up to allow you to trade with paper money each and every trading day. Kevin Hinks, ride 'em, cowboy.
Good morning, Tom. Good morning, Tommy. Yeah, a little bit of volatility in these markets of the last, day and a half here. You know what's interesting to me? A lot of the headline that came out today, other than some good earnings out of things like Procter & Gamble, they're going to, the government's going to look at Google, right? And Google is going to come under some pressure. And talks of breaking up Google. Well, newsflash, Google broken up is worth more than Google right now. And you saw the stock trade lower early, and now it's up $22.
I know.
Because they realized that if you break it up, it's actually worth more.
It is amazing. There's no doubt. I've been watching this all morning, Kevin. And, we knew this was coming anyway. But it is so intriguing, isn't it, man? That they say, okay.
Newsflash for everybody. That's not a bad thing for stockholders if Google gets broken up.
I know, man. Pretty amazing. And, it's what's going to be really intriguing here, man. I mean, when you look at these top 4 or 5 FANG stocks, the bottom line is that they do have a grip on the markets. There's no doubt about that.
Absolutely.
Yeah.
I mean, the only thing that can stop, you pick them out, Amazon, Facebook, Google.
Right.
The only thing that can stop their growth is regulators.
Right.
That's the only thing that can come in and halt their advance, because Facebook is one of the more lethal competitors that I remember in my lifetime. If you are a competitor of Facebook, they'll either copy exactly what you're doing and make it as good, if not better than you, or they'll buy you and get you out of the way.
Yeah.
They are lethal in their practices, and it's worked for them. They are dominating advertising.
Oh yeah.
Google. I think the secret to Google lies in YouTube and monetizing YouTube.
Right.
And where that goes. So I mean, you're right though, Tom. These companies are so massive. Think about if you broke up Amazon and took web services, AWS, by itself.
Ooh. Yep.
That would be an insane valuation on that part of the company.
Oh,
so, all these companies, Tom, you're right, are just massive.
Yeah, there's, and if that Amazon folks, okay, just so you can understand that AWS, okay, is growing by 42%. And that is already a $35 billion number that they're growing by 42%. So
right, and Amazon's revenues based on retail are very gaudy, but 46% of their profits are AWS.
Right.
46%. So, it's amazing how quickly that, and that's where you're right, Tom. That's where all their margins come from. I think in many ways that's fueling a lot of their growth in other areas.
There is no doubt. When you have a cash cow like that, you get to do a lot of different things that, bottom line, in the future will help the company, right? I mean, it's
but Tom, spinoffs happen. Spinoffs happen all the time. And, Chipotle, you look at Chipotle, that was owned by McDonald's at one time.
I know. So, all they had to do is keep...
happen, right?
You know what's amazing about that, Kevin and Tom? All they had to do is keep some of that stock. They sold all the stock. It's like, oh, my God.
Amazing. Amazing. But, so spinoffs happen all the time, and it can happen with Google. But will it? We'll find out. This is not the first time they've been under government scrutiny, so they're pretty good at navigating these problems.
And we know it takes years. That's the bottom line. That's the bottom line.
Yeah.
Hey, so IBM, man, this is one of these equities that, you talk about getting hit, man, right? It's...
Yeah, IBM, pretty disappointing in the movement. Big move, bigger than the expected market maker move. Right now, we had a very risk-defined strategy on that was more range-bound with IBM. So right now, the IBM position's not working. We covered the call side of the IBMs, obviously, because the stock's down. Take that risk off the board. Now we're just managing the put side. Procter & Gamble, we had an upside call calendar on. That's working perfectly. So Procter & Gamble's doing well. IBM, we've got some risk to manage, but our risk is all defined.
I know.
So if you get a move like this, we only have a limited amount of risk. Today, we're trading Snap, we're trading Netflix, we're trading Texas Instruments, all the same ideas.
I love it. And I think, cool. Tommy, when I was listening to your program, you said Netflix has a 40%, a 40-point expected move, right?
They do. 38.87 on that Thinkorswim platform right now, so almost $39
and it'll move
they're pricing
all over the place. So today, as volatilities go up and down. So, Netflix will be trading that. Like Folio will be covering it in their segment. So that's the middle segment of the show. That's always the one we put the most emphasis on today. But also Snap and Texas Instruments.
Yeah. And Snap I have up there. That's more than a 10% move, man. $3.22 for only a $28 stock. Pretty cool.
Yeah, Tommy, that's the great thing about the lower price names is the percentages of the move go way up.
Yes. You got to love volatility, folks, and especially if you're trading defined risk, man. It is totally where it's at. And guess what? You know what's so cool, Kevin, about what you're doing, too, is that you get defined risk, but you got a time frame, too, man, which is, that's where, great, you can be out of the money 1 second, in the money the next second. It's just up to the trader to take the bread, man. It's amazing.
Remember, Tom, we're wrong right now in IBM in a small risk-defined spread. We've got 3.5 days for this stock to recover.
Yeah. Folks, 45 minutes from now, great program. Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, guys.
Thank you. Stay right there. Kevin. Tommy and I come right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 249. The Nasdaq's up 107. S&Ps are up 29. We got gold down $8. You get the dollar down 371.6. And there's some big divergence right there, folks. You got to love it when you have that type of divergence. We get over to the dollar, Tom, and we just look at the dollar first. You know, the dollar has been trying to hang on. There's no two ways about that, meaning staying over this zone, but it hasn't been able to do it. And what you have out here today is that you're down 374. We're at 93.053. And it looks like it's going to break this little swing. So the divergence, folks, if you're in the metals market, to me, is totally where it's at. Because guess what? All you have to do is technically that setup is there. Fundamentally, the setup is even better. The bottom line is that I was looking at the amount of stimulus that we've put in so far. You put in $6 trillion so far. There's going to be more stimulus. If you don't think that if you think there's a free lunch, God bless you. Okay, but the bottom line is that $6 trillion swishing around the marketplace, which we need, by the way. Okay, is going to have gold worth more money and your buying power worth less money. So, you know, we'll see where this baby shakes out. Hey, Tom, how about Goldman Sachs? Right? Did you see this? So
$2 billion, right? On top of the 3.9 they had to pay Malaysia, I believe, right?
That's correct.
Yeah.
So they're at $5 billion, and they made.
So it's two. Go ahead. Sorry. 2.8 billion. It looks like. Go ahead. Yeah.
Yeah, and I believe they made $600 million in fees. So
okay.
just think about this. Just think about how many people are in jail, folks, going out of their mind if they're reading this article. I mean, it's like it's unbelievable. And they didn't plead guilty. This is the thing that's freaking amazing. I mean, this is how it works, folks, okay? But when I look at this, Tom, I can imagine how many other things did these banks get away with on a continual basis? Number one, that they can pay. Okay, so let's just look at this. So Goldman Sachs has reached a long-awaited agreement with the Department of Justice. They're going to pay more than $2 billion to the Department of Justice. They already paid, let's go make this down, because I believe they paid. Okay, they promised to pay $2.5 billion to Malaysia. So now we're at $4.5 billion, and I believe it's 600 million that they made on the deal. Yeah. They made $600 million on the bond sales. Now check this out, folks. This is how bizarre this is. The guy that was in charge of the whole banking group, David Solomon, is now the CEO of Goldman Sachs. What do you think? What school do they teach that in? That's what I want to know.
I hear you.
Think about that. Think about it's. Hey, it's pretty amazing that you can basically be that corrupt. No one goes to jail. You don't even pay. You don't even have to plead guilty, and you're off to the races, man. Let's go to John in Philly. Hey, John, what's going on, brother?
Good morning, Tom and Tommy. I always have to chuckle when we read these stories about things like Goldman Sachs and MBD1. I learned to stop crying years ago and just chuckle.
You know what? I agree with what you're saying, John. Absolutely. But you know what? We got to keep bringing it out because guess what? It never stops. It's corrupt beyond belief. And they'll look for every space. In fact, there's a quote. So what's going on now in the credit markets, folks, right, is that the financial wizards are slicing and dicing each other up in a monster way. Howard Marks, which is really a smart guy, he came out last week, and one financial company was complaining about another going after it as to who was going to get the money. And Marks turned around and said flat out, hey, man, this is the business we're in. You know what I mean? Like, see you later. I'm sure you get
Yeah.
Yeah, testing today, folks.
It's still alarm testing day, I guess, huh?
It's alarm testing day.
Days when we have integrity, but we'll do it right here. So, Tom, I wanted to call and ask you about SoftBank and their equity trading. And Tom, just for the benefit of your listeners, by way of background, I share this with you. Of course, I was introduced to you, goodness, way back in 2005. And what struck me at that time was that you had a lot of street smarts that you applied to trading, in addition to all the, financial analysis that you might do. And I recall you telling all the stories about trading against and with the quote-unquote So's bandits way back in, 1995 or so?
Yeah, started in 94. Yep, exactly. Right.
Anyway, I want to ask a question about SoftBank's trading. Have you drawn your street smarts and explain to us your hypothesis of what is going on? Now, we know SoftBank lost just a boatload of money with those massive investments in things like WeWork and other stuff. And then they hired, and then that fellow or his lieutenants hired some very experienced traders from around the globe, actually, from well-established trading houses. And then we learned, just by way of more current background, of course, back in late August, as the S&P and the NASDAQ in particular were ramping higher, from that July, August crescendo into that September 2nd top, the story came out, SoftBank's trading arm was aggressively and trading huge in equity options and other derivatives.
Right.
So we've heard all that, and we know what the action has been since. But just in the past couple of days, the story comes, or a chapter 2 of this story emerges, namely that they've got $20 billion at work doing this, that, or the other. Now, you and I both know, and most people involved in trading know, when you're huge, you never say what you're doing at the time, because you always need flexibility to get out without everybody else shooting at you.
Sure.
So the question I've got for you is, please share with us the thoughts that have occurred to you as to not what SoftBank is doing, but why these stories are being told here and now.
So what I had brought this up yesterday, that what has happened is that SoftBank right now, bottom line, has $20 billion in the equity markets. Now that is registered. Bloomberg got that number by the aspect of how much they actually own Apple, Facebook, Microsoft, and Netflix. Okay, that's how that thing shakes out. That's where the $20 billion comes from. I thought was so intriguing, and when I look at the article, I'm saying to myself, well, we really don't know. Are they just inside that same article, John and Tommy? They're saying that SoftBank actually bought out of the money calls. Now that would blow my mind if that's the case, because that is the worst. No, that's one of the worst trades out there. Out of the money calls. Okay, it's like okay, and. Yeah, just stay right there. We'll go through this, and we'll try to bisect it and dissect this as much as we can. Bottom line, when we cut to the chase, though, I would say that SoftBank didn't raise that money to say that they're going to be traders. They might as well be a hedge fund, right? I mean, so stay right there. John, Tommy, myself will come right back. Dow up 193, NASDAQ up 72, S&P's up 20. We'll come right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Chart allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Chart is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 200, NASDAQ up 67, S&P's up 22. Tommy and I were talking with John from Philly. We're talking about SoftBank, and we're talking about moving markets. So, John, when I cut to the chase, it tells me, okay, it's going to be really intriguing if, in fact, they ever bought out-of-the-money calls. That would blow my mind. That being said, though, My take on SoftBank is that if we look at how he's operated the private equity, meaning that he buys, he pays up, and he buys to make his portfolio worth more money. So in this particular case, I don't know what's in that prospectus, but evidently he can trade also. That's just telling me that he's doing the exact same thing in the equity markets, and it would seem like, they got plenty of money to do the data on it. That, okay, you get 5 stocks, run them up, keep buying and buying and buying, and hope that you can get out before they come back down. Do you know what I'm saying? So,
Can I follow that up with one final question, please?
Absolutely.
I had a very dear friend who's since passed away, older than me, who was very active.
Older than you? He must have been 200. Only kidding.
Who was a trader, who was a floor trader on COMEX back from 75 through 82. And told me the story of his partners, and other big players on COMEX back in the time who needed to move in and out of gold, silver, or platinum futures. And if they needed to move, say they were long a very large amount and wanted to move and sell out, they took tactics like the following. Like went into the market and advertised that they were buyers of platinum futures. And then platinum, silver, gold all rallied as everybody tried to essentially ride the coattails. And during that rally, they dumped all their gold, which is a very large position,
right,
and took a small loss on their platinum position as it rallied and then reversed lower. What I'm wondering, could SoftBank and its people in advertising its long out-of-the-money calls be in fact shorting the bejesus out of the market with a small out-of-the-money call option position just to try to snooker the markets and give them a spot to sell higher?
Yeah, we don't know. That's the real bottom line. But yeah, I mean, we know that's possible, And have they moved markets? I think they have moved the markets. I don't think that they're moving them now. I think in that run-up, though, that we did get, I think that was the first. It was probably a great trade. And I don't think it was out of the money. I think what they did is that they went in the money, and then they piled on, and they probably did very well. But we'll find out. I think SoftBank doesn't have to report. I think that's every 6 months in Japan. Let me just see something. SoftBank in Tokyo. Okay, so I get SoftBank up here in Tokyo. Let's see. Their next numbers. No, this is going to be good. November 9th. They come out at November 9th. So we'll find out November 9th. Maybe. You know what I mean? As to where they're going.
Yeah. Hey, thank you so much. I appreciate your time. I just thought that was a story I had to talk to you about.
Awesome, man. Appreciate it. Thank you.
Thanks, John.
So we get a market that's kind of oscillating here, Tom. We had the NQs. They were up to 90. They went back down to only up 30. Now we're at 46, man.
Yeah, it is. And I was just I did pull up that article you were talking about, and I hadn't seen that from yesterday, man. And it is interesting that they are buying out of the money calls, and it looks like they're selling calls even further out of the money beyond that, in terms of, capping how much they're spending a bit, but they're still buying out of the money calls, which is, to that tune of money, pretty remarkable.
That absolutely just doesn't make sense to me.
So they're basically call spreads, above the market. So they're paying the premium. Right?
I know.
Exactly. Yeah.
I know, man. I mean, we're gonna ask Kevin Hinks about that tomorrow. I can ask you about it, because that doesn't make any sense to me. When you get that kind of money,
Hey, it does if they think that these tech stocks are going to have a volatile trading season to the upside. And maybe it's a story that, who knows what's going to happen with the majority of the stocks, but maybe when you just look at the likes of the Amazons, the Netflix, the Facebook, the Microsoft, maybe they are poised to move even higher. That would have to be the strategy if you're going to buy some call spreads, right? If you're going to pay premium, to the upside. They have earnings. You're going to say, listen, these companies, they're going to beat expectations. They're going to trade higher, which is remarkable when, starting yesterday, the S&P, even the S&P was 7% positive for the calendar year 2020, the S&P 500, going into kind of the start of yesterday, middle of the day yesterday before the sell-off really escalated. That's a strong position, man, with everything going on in the economy for a broad index like the S&P 500, even as centered as it is around the tech stocks with the huge weighting. There's still a lot of companies that make up a lot of portion of that, and it's 7% positive for the calendar year.
And, what we're going to see, folks, okay, if we look worldwide things are still closing down, not flowing. The last time that, 2007, 2008, it was the it was the retail mortgage market that fell apart. This commercial market, folks, is already falling apart. In a monster way. So the real question is going to be inside of those bonds, and those bonds are down over 50%, 50. So if you paid 102 cents, you're at 52 cents right now. And I don't see any help for the commercial-backed mortgage market. Now, granted, I'm not involved in it, you're not involved in it, most are not involved in it. But what is involved in it is huge chunks of money inside the economy that's going to get hit. It's a no-brainer. The bottom line is that's going to have a ramification somewhere, man. And that's a harder market to get back also. They're all hard markets to get back, and it will come back, okay? But guess what? Are we talking 10 years? Because with a commercial-backed mortgage, the bottom line is that you have to, first off, have a business. You have to know that business is going to be doing better in the future if you're going to pay more rent. And it's like, okay, man, there's right now, there was a number yesterday that a $3 trillion in New York is underwater right now.
Okay. Hey, how about, I hear those fire alarms. I'll talk for a few minutes while they pan out. It's pretty remarkable, folks. Our building, they take fire alarm testing to a new level. 2 days of full testing somehow. But they make sure our building's nice and safe in St. Petersburg, Florida.
Yeah.
So this will be the final day of that. But Uber, I'm not sure if you saw the ride sharing. Could you take a look and see, both of them kind of driving higher? Now, of course, we have that amendment or what do they call it out in California up for bid. But let's take a look at them after the break, because Uber's up almost 4%, Lyft's up as well, and no real news to speak of dramatically, but they're buying them, man, right now.
They're buying it. Uber's up 131, trading 35.53. Stay right there, folks. Tommy and I come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 208, Nasdaq's up 62, S&Ps are up 22. And, we go over to Uber. We take a look at Uber. There's no doubt it's catching a bit out here, man. You're up $1.40 right now, 35.62. And I really don't see any news on this thing, man.
That's what, and you put it on a 15-minute, man, it shoots right out of the gate from $34.50 up to almost $36, $1.50 move in a $35 stock. It's a big move.
They're buying it. Yeah.
Yeah, and it's, and maybe it is 2 weeks from Election Day. Excuse me, and they have Proposition 22 is what it is up in California, as they are going to be looking at how you designate their employees, right? Whether gig workers, full-time employees, or contract workers. And I was going over, I had an article up here. Let me see if I still have it up here. It was just in this Thinkorswim platform. In terms of the amount of money spent, so you have on the one side, of course, pushing the ballot initiative, Prop 22. You have $190 million from the likes of Uber, Lyft, DoorDash, Instacart, Postmates. And on the other side of that, you have labor organizations, labor unions, and organizations with about 16 million. What they do get into in this article that I was pulling up, though, and I'm sure many have written about it, is that, and we've talked about it before, too, not really a clear cut and dry case. And even when you get into the specifics of, and they're talking about different organizations, whether it's minorities as well, that they go both ways, because a lot of people like the idea that they can work part-time, work in the evening.
Oh, yeah.
Work when they want to. And it's not just as simple as you say, you got to take care of your workers, because what's going to happen is there are people who enjoy that part of that employment, right, that will have that taken away because they can't
it's a big deal, man. You need money, jump in the car and put on the meter, right?
Exactly. Yeah. And so, I understand the push for a livable wage, right? I think we all do, man. This one, a pretty complicated issue as it comes down, because we've talked about it. By the true definition of the contract worker, as I understand it, they've gotten to a point of extreme abundance, which is why you want to say you got so many workers. But it seems pretty contractual in terms of, tell us whenever you want to pick up a ride on our network and drive that person to where they want to be.
Yeah,
But either way, so 2 weeks, it's just amazing Election Day. 2 weeks, man, that's going to be decided. These things are going to move, but maybe that's something, just getting a little bit ahead of maybe an expected move, because 5% in 1 day on no news when the market is, up, but that was right out of the gate. So something to keep your eye on.
No doubt. And Florida voting started yesterday. I voted, folks. I was down there. Florida, folks, has a lot of different problems. And we had
I got my ballot. I won't show it. There's my ballot right there. I'm going to drop it off today. My mail-in ballot. There we go.
And, Florida had the Chads when, the hanging Chads.
Yes.
But other than that, Florida has a really fast polling and numbers. I mean, when we just finished this last primary, folks, the numbers were out an hour after the close. And, you know, I went yesterday, man. It wasn't, I waited like 2 minutes. You know,
the poor people in Georgia, man, they got to get their voting in order in a big way.
That's sick.
You have the former Secretary of State that's now the governor. It's been problems with voting across the board. We've all seen the lines. It's a bummer, man, and they're just squashing the vote in that state. For Florida, I agree. I've always been able to at least, and we're very fortunate where we live in Florida, though. We're very populated. There's a lot of areas when you get into the panhandle, right, where county's very, very sparsely populated. It might not be the same story. But around here, man, I agree. I was, and I'm voting by mail this year.
Yeah.
But I would normally early vote, and it was as easy as could be, man. Walk into that voting place anytime for weeks up to the election, or at least a week or
yeah, they're open 12 hours a day, 7 to 7.
That?
They're open 12 hours a day.
12 hours a day, 7 to 7. Pretty cool. I know. So no matter what you think, get out there and vote, folks. Early voting. And as I mentioned today, if somehow you can't do it if you're abroad, I think there's actually still time to select to get a mail-in ballot. I'm not sure if that one has passed, but early voting, we have a unique opportunity. It's very accessible in Florida. So, and realistically, unless you're very high risk, man, if you're going to the grocery store, people have said it. It's, you know, be safe, wear a mask, wash your hands, social distance. Not a big difference as opposed to going to a polling place. That as long as they're not crowded, right, something like that. And going to the grocery store, in my opinion. So stay safe, and you should be fine. Get that vote counted.
No doubt. So let's go take a look at these bonds. You know, so this is going to be, the more I keep looking at this, folks, it looks to me like this bond market wants to break out of this consolidation. It's been pounding the bottoms a little bit too much, and it's having a tough time getting out of there. So, you know, the last low that we had out here was this 173.10. This is on the 30-year. The swing low that's dealing with is 173.16. We got to exactly 173.16 today. But I think this is going to be a little shocker. And the more that I keep looking at it, I'm saying to myself, you know what? Rates can go up a little bit. And if that's the case, what's going to start crawling into the marketplace here is some type of inflation. You know, when you look at the numbers, it's hard to look at the numbers and not say that things are going to cost more money because there's so much more money that's been thrown into the marketplace. And as it got thrown into the marketplace, this is where I'm really going with this, folks. There's plenty of companies that actually didn't need the money, got the money, and then there's plenty of companies that could have used some money and got more money, and then there's plenty of companies that could use more money that got no money but will be out of business. So let's just talk about those three. So one's out of business. The other two are going to have more money than they should have. Not should have. They're going to have more money. And so that means that whether we're talking equities, we're talking real estate, we're talking any hard asset, what are they going to do with the money? Well, to me, they're going to buy something. And I think that's where we're going, man. That's where it looks like we're going. I mean, the Fed wants to go there. We haven't been able to do it yet, meaning at the aspect of, you know, getting the inflation going. But when I look at that, you know what, it's saying to me, yeah, that's where we're going, man. You know, so.
Sure. Hey, as we wrap up this segment, I'm just going to throw some more statistics about the election because I was pulling it up. You get 7 states, 7 battleground states have to wait until Election Day to begin counting the mail-in ballots, including 2 of the most likely that could decide the presidency, Pennsylvania and Wisconsin. You have Michigan is allowed to get a 10-hour head start on November 2nd in processing ballots, but can't count them until November 3rd. And then you have some of the key states, Florida, and as you mentioned, they have a history of producing quick tallies. Now, we've had some problems with, you know, the hanging when they start. The easiest thing to challenge, they talk about, too, are mail-in ballots of that type of thing once lawyers get involved if it's a close contested race. But you have North Carolina, as much as 80% of the vote in North Carolina could be cast before November 3rd, another early counting state. So you have Florida and you have North Carolina. Trump absolutely needs to win those 2 states. So it'll be interesting to see that those 2 are going to be lightning fast. If either of those go for Biden, that will present an opportunity that it could be an early night. But then you have the states up there like Wisconsin, Michigan, and Pennsylvania, that if it's close, you could start having to count them on the day of, and that'll stretch things out a bit. 2 weeks from today, man.
I know.
Did you know that? The election? I don't know if you knew that. 2 weeks from today.
14 days.
Are we going to have a debate in 2 nights? with a mute button for 2 minutes to give people a chance to speak.
And then we haven't even talked about Pelosi or Mnuchin. Mnuchin is in Israel, so I don't know how they're going to get a deal done by tonight.
I was listening to your show last night. I heard.
Stay right there, folks. Come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 217, Nasdaq up 38, S&P's up 19, and gold, folks. Gold just went from negative down 15 to up 2. About time. The King Dollar is not holding price. We're down 407. So, Tom, did you get some stimulus package for us or what, man? Let's go. The market needs some money, man.
The clock is ticking, man. Let's go. The clock is ticking. I don't have my watch on, but every second is passing by, man. Today's the deadline, and it would make sense. It's not a false deadline, man. 2 weeks to the election. With the Supreme Court nomination that it looks like the Republicans are going to get through. I mean, you can't just pass a huge multi-trillion-dollar stimulus plan. So I don't see it happening, as you mentioned. You know, nothing is impossible, of course, but in terms of finding agreement between the Democrats in the House, Speaker of the House Nancy Pelosi, President Trump, and Mitch McConnell, right, with 14 days left to go, I don't know how that happens. So,
pretty intense, man. I mean,
it is.
It's, you know, as to how to figure out how to trade this market, it's not easy, folks. That's the bottom line. Now, I'm going with the ABC structure down. The SPY did an A to B. It broke the B point yesterday. So that's telling me that we're still going lower. And it's you know, you see this is pretty clear how it basically broke it. That B point there had 60 million shares, and we did it with 68 million. So that's saying to me that, you know, you're going to get lower price. It's down about $4 from where we are. $2 a gain, then there's another $2 underneath that. So
It's quite a move in gold, yeah.
yeah, I know. And it's about time. Well, it's intriguing. I mean, I always like it when the dollar's down like that and gold's down.
Sure.
I mean, because it's like, okay, man, you know, that is not how it works, folks. Stay right there, folks. We got Think or Swim coming up next. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon, folks. Have a great one. Have a safe one. Thanks, Basil.
Thanks, man. Love you.
Okay, folks.